Welcome to this new episode of your next trade called today Fed Asymmetry. So before we start and we do the usual week, I would like quickly to start from the end actually, and just to give you a quote that I had this morning. So I went for a run, came back, and on the Discord community, I was very lucky to have this feedback from one of my ex-students. We did the mentoring 3 or 4 years ago. So that this is someone very successful. He sold a business for multi-millions, and he has been putting money at work, more than $1 million over the last 24 months. And I want to give you a quote because I know some of you are very frustrated. They are seeing people, on social media saying you can make 50, 100% returns trading options, trading calendar spreads and all those things, and you can be flying private jets. Don't get me wrong, this is complete BS. And, this quote is pretty good. So I will be happy, with the 8 to 12% annual returns and 2 times return to max drawdown. So I'm not a good advertisement for a Lambo. Yes, he's not. So, most people that will be starting, retail traders will be male between 20 and 40s. And what happens is they will go for the stupid education. They think that they can be making 50 to 100% returns. So they will be spending shitloads of money in education, and they will be losing a ton of money then into trading. So instead of doing that, what you can do is you can either join us on the trading community. That's on Discord. We got 3 free channels, mostly 1 channel. If you go for the 4x4 video series and or the mentoring, you get access to more than 20 channels where I try to increase and make better this trading community, where if we carry on, we'll all be gaining from that. Otherwise, if you got any questions, you can send me an email at greg@duponttrading.com. Finally, if you like what you're seeing today, you can be putting a like or a comment into the comment section. So let's go back to the usual stuff and let's discuss the Fed asymmetry. So what happened for this week is on Wednesday, the FOMC decided to cut rates in the US by 50 bips, by 0.5%. So you remember or not, last weekend we discussed if the US central bank will be cutting rates by 25 or 50 bips, and going forward by how much they will be cutting. So what has been happening, we are starting the cutting cycle. 1 month ago, Powell, who is leading the Fed, was pretty adamant by saying, unemployment is going up and we will have to be cutting rates. And, the odds were pretty much like he was going for 50 bips. And as he's the boss, he has been pretty good. And the others have been following. But I want to give you some asymmetry about what has been happening through the eyes of of inflation. So the Fed, the US central bank, has a dual mandate, and this is, you can see the mandate here. This is about promoting maximum employment and stable prices. So low inflation and low unemployment. And in the meantime, it's not really in the mandate, but it's part of the mandate they need to keep financial stability. So in other words, if you want to do Fed put, if you want to do ZIRP, you can do those things. But just looking at about the last 4 years, if we look at the PCE, so what is PCE? This is inflation. This is kind of the CPI, but a bit better. And this is what the Fed is mostly looking at. And I want to look at the Fed to the PCE through the core PCE, which is, the most important one. And I can give you 2 kind of numbers. I can give you the PCE core year on year, or I can give you the PCE core month on month annualized. And we start from 2020 and in 2021. And as you can see, the Fed Fed doesn't want inflation to be above those 2%. Very quickly, either you take the year on year, which is from here, we are talking March 2021, or before that, we are talking, 2020, if you look at the annualized, the inflation was running above 2%. And guess what? The Fed only started to increase rates in March 2022. So in other words, they waited at least 1 year to increase rates versus the inflation, which was above 2%. So on one hand, they were saying, let's wait in 2021, let's wait that we're going to have confirmation. what they have been doing now, if you look at inflation, if you look at the PCE, so this is the same thing, PCE year on year is still running above 2%. What you can say, if you are pretty like the Fed, you're saying, actually, no, the PCE core month on month annualized has been running below 2%. But that's only 3 months, okay? That's May, June, and July. So in other words, they started to cut 4 months after the numbers came below 2%, whereas in the meantime, they waited 12 months to increase rates when inflation was above. So that gives you some color about the Fed asymmetry. And in other words, what you have is the Fed, like the Treasury, has been pretty active in putting the economy pretty hot. We are running higher deficit, and we are running an economy that is having inflation way above what has been the target. So in other words, what you should not be doing if you've been bearish is not about, how you want the trade, how you want the Fed to be. So you should be trading the Fed the way it is. And that's very important to not fall into, the Fed should be doing that. The Fed is doing, look at what the Fed is doing and trade accordingly. So that was for the Fed asymmetry. We had a 50 bips cut for on Wednesday. We're going to see what are the trades going forward and what is the Fed intention going forward. So let's go into the week to date asset performance, where we had a risk on. We are talking stocks, S&P, Nasdaq 1.5% roughly for the week. Euro stocks roughly flattish for the week. So Europe as always a bit struggling, but overall, stocks doing pretty well. Cryptos doing very well. If we look at the dollar a bit of weakness, but interestingly, as we can see here, not only the gold, which is making new time high at 2600, but I want to look at WTI. So WTI bounced nicely above the 67, is now around 70 something. WTI and copper benefited this week. So a bit of a bounce in terms of commodities as well. And if we jump into the week to date industry performance, and I want to flag here the S&P and the Nasdaq, as you can see, you have many industries that have been outperforming the overall market, whereas, the big winners, we are talking technologies, we are talking semiconductors, have been a bit underperforming the overall market. So as we're going to see here, if we look at the sector performances, anything that has been defensive, we are talking real estate, healthcare, and consumer staples, have been really underperforming the overall market. So if you've been long, for example, XLP versus the S&P, you're down roughly 2.5% for the week. So this is a decent move. But overall, the cyclicals have been doing pretty well. We are talking industrials, we are doing materials. And, the odds going forward is, are we going to see more than a soft landing? Actually, soft landing is a good scenario, but what you could have is, if the FOMC, if the Fed is putting more incentives into the economy with actually macro numbers that were pretty good for the week, we could have a higher, even going forward, economy and GDP. So if you look at the Atlanta Fed, now they are pricing a 3% GDP for Q3, so pretty good going forward. So what about the rates? Rates, we are talking 372, and as you can see, a bit up on the week, so we went through from 360 to 372, and the yield curve is still now into positive territory. Here, I'm interested into the Fed going forward, because we've done some moves, we've done the 50 bips, which was pretty aggressive. We knew that the Fed will be cutting by 100 bips roughly between the end of August and the end of December. Despite what they said, 3 months ago, the dots were at 1 to 2 cuts for the year. But now we do know they're going to be doing another 50 bips. So another 50 bips, we are talking the two next FOMC meeting. We get one at early November, another one roughly mid-December. And we should be expecting, if we look at those numbers here, a 25 bips cut in November, another 25 bips cut in December. I'm interested not only into those next 3 months, but where is this cutting cycle going to be ending? So the Fed this week through Powell has been saying roughly the neutral rate which will be, the rates that they are targeting, is around 2.9%. And as you can see, guess what? 2.9, 2.8%, this is where the market is pricing. I'm not an economist, but it feels very much like actually we are talking more than 2.9, it's probably 3.2 to 3.5%. So in other words, again, the Fed is keen on being more aggressive, and we should have, if we compare this 483 that we have now versus our 284, that gives you what? 200 bips, so that's a 2%. So we should have between now and the end of the cutting cycle, at least when we look right now, a 200 bips or a 2% cut. What about the VIX? Guess what? We are back to the magic 16%. We discussed the 17% option open interest that we had last Tuesday, Wednesday when it expired, and we traded between 16 and 18%. Just after the expiry of the VIX, we had a bit of move up. So now I would like to jump into technical analysis, and this week I'm going to be using Bloomberg because I thought it was a bit better, starting with the S&P. So the S&P, this is your trend is your friend. As I've been saying at the start of the month, seasonality is not great in September. What I've been telling you, I thought that we will be ramping into the expiry, but in between we had a bit of a hiccup. So timing is everything in trading, but now we have been ramping up into the expiry. If we look as the way we're going to be looking in the next 5 minutes, the seasonality going forward is not that great. But S&P making new highs, Nasdaq up, if we're very keen on updating. So Nasdaq, I think this is an interesting chart because that tells you, the trend, the downtrend is no broken, which is pretty good. If you look at the Russell now, Russell is to me sideways, and I'm struggling to be reading it. An interesting index that I think it's much more easier to read. It's the DAX, it's the German DAX. The trend is pretty obvious, so don't fight this one. Despite all the bad news that we have in Europe, the trend is still your friend. Pretty much the same if you look at the Stoxx 600 in Europe, where we are very close to making new time high. So this is the target, this 525, we are 2% from this all-time high. CL1, so for oil, I was mentioning, the 67 level that we had as a support. So we went into this 67, we bounced, and we should be keeping an eye because that's the same of the copper. We had so many bad news and so many bad momentum coming from China and the world slowing. And despite all of this, actually, those two commodities have been doing well, at least over the last week. And I will not be surprised to see very soon Chinese news coming. Quickly, dollar yen. So a bit of weakness of the yen that was yesterday after the Bank of Japan comments, but you can look at this chart and literally went from 160 to 144 now. So that has been a 10% move, a one-way traffic. So it's not abnormal to see a bit of a bounce of the US dollar. Finally, 3 stocks that I'm looking for this week, more, but starting with Micron. So we're gonna have the earnings this week, so it's bang on the support. This one is an interesting chart. I saw many bearish comments from analysts, so we should be keeping an eye on this one. Costco as well, earnings defying all the odds and now above 900, trading at the 50 times PE. But if you do a Costco long-term chart, actually let me share with you a chart of this is the one of Costco in the long run. This is much more interesting, as you could see that actually. So why you're using logarithmic? Because you want to be making the changes in percentage terms and not in dollar terms. And as you can see, this business has been around for quite a long time, and you are still in the trend. If you are looking in terms of risk reward, you are at the top of this range. So in other words, you're better off being short than long. or at least being neutral, because we are very close to the top of this range. Finally, Nike, we had some headlines on Friday with the new CEO. We do have activists with Bill Ackman who started a position. I think this is an interesting going story, forward story. Why? Because we all know Nike. It's a story that needs a bit of change. And the chart, we had a big move on Friday and doesn't look that bad. So this is it for the technical analysis. So what did we have for this week? So the week, this is for US&P. So here you get the blah, 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 the volatility, a bit of volatility on Wednesday. But on Wednesday in the morning, if you checked the positioning, there was a good feel that either you will be moving big time up or down, or actually you will be flattish, because that will have been the best outcome for the market makers. And we roughly ended up the day flattish, but the day after we slowly grind up, and we are not talking during trading hours for the cash, but overnight through Globex, where the overnight squeeze. So if we look the overnight squeeze, this is this one. So what you should be doing, you can do whatever you want, but it's interesting to know when the market in terms of hours is doing. And if you look about the last 20 years, it's pretty clear that most of the performance of the stocks have been overnight, so not during trading hours. And this week has been pretty much the same. We are trading sideways during the sessions, and then overnight we trade big time up. We are talking 1.7%. And then we don't move. So literally the US opened the cash, and for 5 hours on Thursday we didn't move. So I would like really to underline the importance of looking at when the performance is happening for stocks. So finally, on Friday, we got the index rebalancing. So we got the option expiry. This is one of the reasons we had so much big volume on Friday. But as well, we have, as always, the index rebalancing, which is on the third Friday of September, for example. This is for the S&P. We know that Palantir was going into the index, and the Apple weighting was going up. But as you can see, actually in the last 5 to 10 minutes, should I say, the stock dropped, because very many people try to play it before. So always interesting to look at those index rebalancing. In Europe, there was an even better one that I explained on the Discord community, which was one of the names that is trading it both in Amsterdam and in Madrid. That was a free trade. You could be making 4 to 5% free trade guaranteed. So what about the catalyst going forward? So we have the flash PMIs. Let's start with the macro. Flash PMIs, we got the GDP, but that's the revision of the GDP. We got a bit of housing numbers, and we got the PCE for inflation. So PCE, we started the session with PCE. Now we got the PCE that is coming from August. As you can see here, this is for the PCE. Very recently, the S&P has been doing very well on PCE day. So the market has been at ease with CPI, PCE / inflation, saying inflation is coming down. Even when the number is a bit better, we just look at the trajectory. So in other words, inflation is coming down, growth is still there. The market is pretty much okay with that. If you look at valuation, it's 21 times. If you look at deficits, not great. So, we are still going higher, momentum, inflation. So what you try to figure out as a portfolio manager is when things are turning. So we had 12 to 18 months inflation coming down. We do know that the Fed is going into accommodation again, if they were not already. And that means you don't want to see inflation going higher, because that means the cuts that are priced by the market might not be coming. So this is for the macro. In terms of earnings, Micron, as I mentioned, Costco, and some other names, we're going to be starting the earnings season around mid-October. So in between, you do have some names, but not that many names. Flash PMIs, we're going to have, in terms of Fed talkers. We're going to have the biggest one, which is Powell, on Thursday. So he will confirm or not, what he has been saying on Wednesday. As the Fed blackout period is over, that means, Fed speakers can come and talk about, what they have been seeing or what they are seeing in the future. We're going to have some names, and as well, like any end of the month, we're going to have bond supply. We are talking some 2 years, 5 years, and 7 years, which one of the reasons as well as why we saw yields going up on Thursday and Friday, because very much often, when the market knows that supply is coming the week after, that requires higher yields to meet the supply and the demand. In terms of bad seasonality, so I've been saying it, and you probably saw a lot of research on bad September seasonality. I was clear at the start of the month that I was expecting this to start after expiry. I was wrong, because we had the market coming down, but now it's back to my scenario where we are at all-time high next week, which is the week after expiry, and I want to flag that this is not for me. I've done the research, but here I'm sharing some research from Almanac Trader. Since 1982, as you can see, the week after expiry is down 0.8% on average, and it's only up 31% of the time. So in other words, 69% of the time, or 2/3 of the time, it will be down. And as you can see here, this is since 2009. More recently, it has been down. So this is for your seasonality going forward. As well, we do have the position of that we discussed, is 57.50, the open calls, which are a bit of a ceiling for the market. This is for the JP Morgan big hedging that they put every single month. So we should be looking at this 57.50. Finally, on Friday, there was a bit of noise around Intel with Qualcomm that could be interested in buying. Why going forward we might see some consolidation in that space after some big names have been winning that much, and we've seen some underperformers like Intel. So I will be looking at that space to see if there is consolidation or not. And finally, for the week, we are expecting a plus or minus 1.2 move. So this is roughly what we have for the catalyst going forward. Bad seasonality, FOMC back into talking to the market, and a bit of drivers through Micron, Costco, Intel, and Qualcomm, and some other names. So this is it for me for the week. I hope you had a good week, and more importantly, have a good trading week. Bye-bye.